Hello traders and welcome to another video review. Today is Wednesday, June 1st, 2022. Let's take a look at the calendar as usual first. Some data had been published overnight and they are quite important. We got the GDP from Australia beating the expectations of 0.5% with the actual reading of 0.8%. However, this is way below last reading of 3.6%. And doesn't look actually good at all. We got the German retail sales plummeting minus 5.4% in the month of April, which is way below minus 0.2% and way below minus 0.1% last time. Data from the UK shows us the nationwide HPI is increasing, however not that dynamically, 11.2% only. German manufacturing PMI and the manufacturing PMI from the Eurozone and from the, of course, UK, all of them are scheduled for release around 10 and 10:30. Around 11 o'clock we got the unemployment rate scheduled for release from the Eurozone. Please remember this rate is now 6.8%. At 1 o'clock p.m. we got the ECB President Christine Lagarde to give a speech, and then we jump to the New York session. Labor market from the US, ADP North employment change data will be published at 2:15, and the jobs openings will be published at 4 p.m. Moreover, we got data in form of the manufacturing PMI, ISM manufacturing employment, and ISM manufacturing PMI scheduled for this at 4 p.m. The key event of today is the Bank of Canada interest rate decision scheduled for release at 4 p.m. and the market participants expect the Bank of Canada to hike the interest rate from 1% to 1.5%. At the same time, there will be Bank of Canada rate statement issued. At the end of the day, we got some speeches here from ECB Panetta, FOMC member Williams, ECB Lane, FOMC member Bullard, and then of course at 8 o'clock we got the beige book scheduled for release as usual every first Wednesday of the month. So pretty much busy day for traders. We got the interest rate decision of the Bank of Canada. We'll definitely take a look at this one. However, please be very aware of the fact that this might be violet day. This might be the day when the market moves dynamically up and down, or maybe in one direction, or who knows how it's going to be. However, plenty of data, plenty of speeches as well, plenty of comments or remarks might have an impact on the currency market. So please stay vigilant and be aware of the fact that today is kind of a busy day, first day of the June 2022. Let's jump to the Australian dollar chart. The Australian dollar daily time frame chart is showing us a sign of a weakness. And that's only because we jumped above the technical resistance at 7,168 pips. The local high was made at 7,205 pips. However, we didn't touch 7,244 pips, which is the 50% of the Fibonacci retracement of the last big impulsive wave down. This ABC or 1, 2, 3 cycle to the upside is showing first sign of a weakness. The momentum dropped to the level of 54, and none of the key technical resistances or the Fibonacci retracement level has been hit already. We got the big red candle here. If there's a confirmation here in form of the big red candle as well, something like this, then of course we might be certain that this ABC move to the upside is now done, despite the fact that we got data from the Australian economy released earlier on. So The outlook remains slightly bearish right now. However, it's possible that we will have a spike for around, I don't know, maybe 40, 60, 80 pips higher, 80 pips higher to the 50% of the Fibonacci retracement, and then this spike might be faded. So please be aware of the fact that this up move might be simply about to terminate on the Australian dollar. Let's take a look at the Canadian dollar, the main pair for traders today because of the interest rate decision. And what do we have here? We have a retracement of 61% hit earlier on 1.2661 and broken. The local low was made at 1.2628, which is more than 30 pips lower, and we are still following our scenario, ABC corrective scenario to the downside in form of the zigzag. However, this is a little bit too low right now. So if we get below 61%, now it's not important for us because it's been violated. Then of course we have the immediate technical resistance 1.2715. If we fail to break above this resistance, then we go lower. We go lower towards 1.2686, 1.2586, 1.2570. This is the target for the wave. See, and now the level of 1.2675 is technical resistance for the price. So the outlook remains bearish with the negative RSI a little bit steady right now at the level of 40. However, we could still develop another leg down here on the RSI and then dynamically move lower towards 1.2570. Where is the target for the wave C of the recent corrective decline? So that's the Canadian dollar. Because there's plenty of data from the Eurozone and Germany, let's take a look at the euro dollar today. The euro dollar has made a very interesting bounce from the lows of 1.0343. This is the key technical support. Multi-time frame divergence made it easy. Now we are back inside the channel, and inside of that channel we got this kind of a very interesting pattern here. This is a daily time frame chart, so every candle here is a daily candle, and as you can see, the market is having a problem with the level of 1.0760 where the technical resistance is. We broke above it, closed above it, 1.0780. However, the next day, big flash to the downside. Today we are not moving yet. We are waiting for the data. We are waiting for the trigger, basically, that could spark the volatility. More volatility is needed to the euro dollar market. However, it looks like, despite the fact that we broke above the level of 50 on the RSI and now we are trading inside the bullish territory, and it looks very bullish from the momentum side, this up move is lacking the conviction to go higher towards 1.0809. All right, so the key technical support right now is located at the level of 1.0643. Big blue arrow is showing this. So if we break below this level, that's it. The bounce is done. We are back to the downtrend, and any breakout below 1.0472 is another confirmation that we will revisit the lows of 1.0343 soon. Okay, so please keep an eye on the current situation on euro dollar. As long as we trade above this level, there is still a chance for the boost to travel higher and to extend this dominance and the momentum higher, of course, maybe even touch the key technical resistance and supply zone 1.0933. However, for now, it looks like we are not that much convinced we should go up right now. I'm talking about bulls, of course. So that's about it from the currency market. Let's take a look at gold. The spot gold market, as you can see, daily time frame chart is showing us again a very nice bounce towards the level of 1869. However, we got this bearish engulfing pattern here. So what is going on after the bearish engulfing pattern has been made? We got the confirmation, little bounce, and then breakout to the downside. So maybe we just haven't finished the ABC to the downside, and we will of course extend this move lower. However, I would like to point out that we retraced only 38%, that's right, and we are approaching 50% right now, but we need to break below 61% in order to confirm the bearish dominance, right? So please keep an eye on 1818 on gold in order to confirm the bearish dominance. And last but not least, let's take a look at Bitcoin. We have the increased volatility on the Bitcoin. Very nice breakout finally on a Bitcoin after so many weeks of so many days of the consolidation and the whipsaw trading. We got a breakout above the range. Closed was at 31,248. Then next day the high was 32,370. We almost hit 32,905. However, we need this, at least this level, to be hit in order to initiate the down move. Only a breakout above the level of 34,290 is bullish. So this arrow is green only if the market has violated this level, clearly violated this level. Otherwise, we might see one more wave to the downside looming somewhere there in the shadows of the market, and the bears are getting ready to flash this market once again. This looks like a relief rally on Bitcoin after days of the bounce anticipation. Basically, we hit the level of 50. We just barely broke above with 51 points. However, this is not like a proper breakout. We need a strong breakout towards the level of 70 on the RSI, into the bullish territory, into the positive sentiment. I don't see it here. We need to break above, out of the channel, above 34,290 in order to achieve this kind of a price action. So please consider this scenario for a Bitcoin as the current market affair on a daily time frame chart, of course. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.